Good morning, this is Jeff Hildebrand for TBL Traders. This video is going to be on indicators, moving averages principally, but on two or three indicators in general. There's a few things I'd like to let you know about indicators. Indicators are backward looking. They are generally based on price. There are indicators based on volume as well. But be aware of how the indicator is calculated if you're going to use it, at least generally. Today I'm going to speak about the simple moving average, the exponential moving average. I'm going to talk a little bit about RSI and the MACD. So let's start with the exponential moving averages first. I prefer them to the simple moving averages. The simple moving averages are calculated on the price at the close, and then divided by the period, the period of time that you want. I prefer the exponential moving average because it's softened out a little. Basically, it divides by 2 the close and the open or something. I can look at it exactly if we need to, but it just softens out the curve for the moving average. So let me give you an idea on the chart what that happens. Here, I've left in a 9-day moving average, so you can see how closely it follows the curve. What I'll do is I will add the 50 and the 100 so you'll get an idea of what that curve looks like. This is on a short-term chart, so the 50 here and the 100 here. Some people trade these. I don't trade them as indicators. I use them as sort of a guideline or trend analysis. But let's look out a little bit and you'll see some more important changes. So the 100-day moving average that I spoke about hits about here. So there is some resistance here. I don't like to use them, as I said, as trading trading triggers. I wouldn't use them as a trigger necessarily, but it would be good for give you an idea. I prefer triggers that are based on points of support and resistance than moving averages, but they give you an idea. So here during this period of time, the moving average put you into an interesting position because you're below the 50 and you're above the 100 here, which creates a type of channel which appeared here. And then you broke out. You broke out over the 50. There was a news event here. It was the Fed announcement. And it's following the long-term trend upward. If we add the 200-day moving average, you'd get a good idea of what... I don't really need to. I can still use the 100-day moving average, and I'm still trending strongly up. Let's go back to a shorter time frame chart, which that looks sort of interesting there. This is on the S&P 500 future chart. You can use these moving averages on any product you want. I'm going to speak quickly as well about the RSI, the Relative Strength Index. This is a momentum oscillator, and it measures the speed of change in price movements. I use this indicator for my short-term trading. So I like to look at this on a very, very short time frame, the RSI. On the other hand, to get a perspective of what it does, let's look out a little. And you see it swings. Technically, it can swing between 0 and 100. What happens is that when you see an RSI over 80 or an RSI under 20, some people use 70 and 30. I like 80 and 20. There's a lot of pressure to sell at 80. Okay, and you'll see that's pretty true here. So we break 80 on the RSI back in April, and you get a nice little downswing. Same thing happens nearly here. Here, not so much. You have to be careful on your time frames because it's over 80, it falls, and the trend continues. Over 80, market falls, trend continues. So lately, the better way to use the RSI in an upward trending market is to target these lower under 30, between 20 and 30 values to look for entry points. and I tend to do that on a shorter time frame. This is a 3-month chart. You can go out, but shorter time frames, I believe more in this. So here was a good trigger to start looking at long opportunities, and that's proved out to be true. These higher, because we're trending upward, keep in mind there's a lot of pressure for the market to move up. These are not as reliable triggers, I would say. In an upward trending market, the higher RSI is a less reliable indicator. Keep that in mind. The lower RSI in an upward trending market is a stronger indicator. That's my belief in any case. So quickly, I'll talk as well about the MACD. That's a trend following indicator, and it shows a relationship between a couple moving averages. It's calculated on the 26-day EMA, the exponential moving average, and the 12-day EMA. It's a little more complicated. Like as indicator, there's a 9-day signal line on the MACD, which some people use as triggers to buy and sell. Those are often crossover points here. You see the signal here. I don't use them as buy or sell signals personally. Some people do. Again, this is historic information. When you're looking at indicators, you're looking in the past. So the past doesn't necessarily reflect what's going to happen in the future. And if you see a signal here to sell because of a crossover, obviously you can see that that's not happening. We're strongly in a strongly upward trending market. As a signal to buy, possibly here, that wouldn't have been false, but it's another trend following momentum indicator. It gives you an idea of where the momentum is in the market. Momentum is falling, momentum is rising, falling, falling, which corresponds, I would say, here without too much of a problem. Momentum starts to rise the 15th of June. I think that's fairly true here as well. So the indicators, be careful of indicators. They give you an idea. Be careful of trading just with the moving averages. I think that's about it for moving averages and a couple of indicators. If you need to, we can go into those in detail, how they're calculated, when to use them, when not to use them. But as a general rule, be careful of basing trades on indicators alone. Use support and resistance, use trends, use your intelligence for entry and exit. Don't just use indicators. You'll be sorely disappointed if you base all your trades just on the RSI or base all your trades just on moving averages. They will surprise you. Okay, thanks. That's about it. That's it. Bye.